Federal Reserve is not the U.S. government's bank by any means. Like the Canadian Central Bank is the Canadian Central Bank. Who owns the Federal Reserve and what's their agenda? It's debatable. But as far as going back to a gold standard, whenever that's been talked about by a U.S. president, usually that U.S. president doesn't see the end of his term.
Hi, and welcome to the X22 Report Spotlight. Today's guest is John Anderson. John has over 20 years of capital market experience, specializing in the resource sector. He was a founder and financier of many startup companies with experience on the New York Stock Exchange, NASDAQ, and London AIM and Swiss Stock Exchange. He was founder of Deep Six PLC, American Eagle Oil and Gas, as well as a founding general partner in Aquastone Capital LLC, a New York-based gold fund. Anderson has raised more than $35 million for Triumph Gold, formerly known as Northern Free Gold, and I am very happy to have John on the X22 Report Spotlight. John, welcome to the Spotlight.
I really appreciate you inviting me to be on your show.
Hey, thanks for being here. And I just wanted to start off with gold and silver because they've been performing incredibly since gold's intermediate bottom in September 2018 and silver's in November 2018. Both are up big, trading at all-time highs against all major currencies except for the US dollar. Do you attribute this to fears of trade wars or to the record-breaking purchases by central banks?
I think it's a combination of many things. I think gold is really starting to raise its head as what it is. It's not just a flight to safety. It's a currency. It's got value. It does not decrease in value. And as governments continue to dilute their own treasuries with these quantitative easings and taking on more debt than they can than anyone knows who actually is the buyer of this debt. The hard assets are starting to go up, and gold is really starting to, I think, rise above all of them right now, which is great.
Central banks normally say that gold is a barbarous relic. You don't need gold. Take the paper currency. Why do you think central banks aren't printing more currency and holding it? Instead, they're getting gold.
Well, China and Russia are the two that are publicly going out and saying they are buying gold at record levels right now. The old days would be the French, the Italians, or really the Swiss. And that once the Swiss started buying, or the Americans, then you would start seeing a reaction in the gold market. Right now, in the North American market, people aren't really paying attention to the fact that China is, and of course Russia, that are engaged in these trade wars with the U.S., have been buying and accumulating gold at record levels.
Now, billionaire investor Pierre Lassonde just plotted a chart of gold prices 20 and 30 years into the future, and he's deduced that prices will reach a minimum of $5,000 and more realistically between $12,000 to $25,000. The fact is, gold under this fiat system has multiplied in price more than 45 times. Should all investors own some type of gold?
Every investor should own gold. In the old days, and it wasn't that long ago, just over 25 years ago, Canadian pension funds, for example, used to have an 8% weight in mining and gold stocks. Right now, that's zero. Because obviously, right now, you look at the stock market, the S&P, the Dow, the NASDAQ, these are all things that are going through all-time highs. And they're not backed by actually earnings. Ray Dalio is a good example, where he has gone out and said this is getting crazy, where it's like the NASDAQ bubble of 2000 again, where people are counting eyeballs on a screen to value a company. As far as Pierre Lassonde and his projections, they really mirror Avi Gilbert, who's an Elliott Wave specialist. And he started writing about this in 2014-15, that we're going to be going to a $20,000 gold price over the next 20 to 50 years. And it's strictly a fundamental of not just supply, demand, and fundamentals, which Pierre's backing his on. These are long-term movements in sectors. And I'm a true believer in long-term cycles. A lot of our shareholders are long-term cycles, like the Norwegian Pension Fund. These people are looking at 20-year cycles. And this cycle started in 2016, or you could say arguably in 2000. And we've just gone through a real bear market drop in the equities. But gold and silver are starting to move forward. And that's going to, I think, relate very well to the equities once these major mining companies are starting to put out earnings based on the higher gold prices, just from what you mentioned from last year.
So you've been in the gold industry for quite a while, and now you're head of Triumph Gold, whose biggest shareholders are no other than Barrick Newmont and the biggest copper company on earth. Why are two of the biggest miners on the planet so heavily invested in Triumph Gold?
Well, we have a good resource base. We have a project up in the Yukon. It is geopolitically in a very safe area. A lot of other majors are starting to move up into Canada. Newmont is actually the largest miner in Canada since their acquisition of Goldcorp now, and they're developing other projects. What separates our project from a lot of the others out there is that we have a resource already. We have a substantial resource, albeit lower grade, but those resources will start to kick in at that $1,500-$1,600 gold price. What we've been doing, and why Newmont really got into to investing in us when it was Goldcorp originally and the Zijin Mining Fund, is they saw that although we've got that as a backstop, as not a lottery ticket, but that's going to be worth a lot of value in the future as gold goes up. We have a lot of high grade exploration that we've been focusing on with various targets within our property. We actually have a property package that is, won't say world class, but it is district size. It is 200 square kilometers. That's 5 times bigger than Manhattan. And literally everywhere we go and prospect and do exploration, we're finding new higher grade sources of gold to follow up with the already substantial resource we have.
Now, I've seen evidence that gold ounces in the ground are valued around $20 an ounce, and Triumph has about 5 million of them. That should be about $100 million market cap, but you only trade for 50 million, which is fairly discounted. Is there something that I'm missing here?
Yeah, our ounces that we've put out in last update in 2014, those are gold equivalent ounces. It's about 3 million ounces of just gold, but then you've got the copper and the other metals that, on an equivalent basis, give you that higher number. If you just use the $3 3 million ounces of gold, and you put $20 on it, there's $60 million. And right now in US dollars, we're trading half of that. We're about $30 million US right now. And when it was 50, it was Canadian. But yeah, we're talking US dollars. So we are grossly undervalued, but we believe in the project, and we know we're going to start to get value as the gold market comes up, and give the investor a higher degree of confidence of where this project's going.
We've been watching the Federal Reserve, and we've been watching Trump push the Federal Reserve into cutting rates. And the Fed has cut the rates about 3 times now. And it looks like they started some stimulus here. They're adding billions to their balance sheet. What effect will this have on gold?
It'll be unfortunately, what's going on is extremely bullish for gold. Right now, just this week, what they put in a $250 million. That's steroids for people with assets that can leverage off of that, and that's why the tech stocks are taking off. Real estate is doing very well because they're getting free money. And once they start even talking about negative interest rates and hinting of negative interest rates, that's going to happen. And hard assets, gold, store of value, will start to shine. And the one thing I do want to stress about where I think gold is going, and Mr. Lassonde is correct on it, not just on the supply-demand characteristics of it, but it's also the cost. Our gold sector right now trades at 1 times net asset value. The gold companies do. In a bullish market, they usually trade at 2 times net asset value. And then your leverage is the increase in gold price. We're only starting to see that now because just a few months ago, you had $1,200 gold. Now we're hovering around the $1,500 gold. So you've got a $300 margin that all these majors and producers are starting to make great cash flow off of it. In fact, Newmont just came out with their numbers yesterday. B2 Gold, which is a junior company that does a 250,000 ounces last quarter, record numbers. And as such, even with gold down, these stocks are starting to go up now, and that is going to flow through to our sector, which is the exploration and development side, where we have a substantial resource. Those majors have to replace their ounces. And we've got one heck of a head start with 3 million ounces of gold on our property.
So do you think gold is going to outperform the Dow Jones? And if it does, what does that mean?
I think gold is going to outperform almost every sector and gold stocks. You can see it. the Dow, they move stocks in and out of it all the time. The Toronto Index, which is used to be heavily leveraged to gold, they've just been replacing some of their energy sectors, energy stocks, with more gold stocks. So the Toronto Stock Exchange, the index looks like it's going to do well, but if you had actually just bought all those stocks, you'd actually be down. Same with the Dow; they replace companies. But as far as the Dow, as long as they're constantly printing money, the stock market isn't going to fall apart by any means. But they're going to be killed by, I think, the rising price of hard assets, of which gold is, I think, going to be the premier one.
So if gold continually rises and it beats the Dow, what does that mean for fiat currency?
It means all currencies will decrease in value relative to gold. What is amazing, though, as much as the Americans are being accused of deflating their currency and doing all this quantitative easing, almost all the other countries in the world are starting to do this now. Canada, where I live, they're probably outpacing the Americans right now. So gold is going to do very, very well. And you look at every other currency that's out there; they're doing the same thing. The euro, so the U.S. dollar isn't going to fall apart relative to other currencies, but relative to hard assets, especially gold and food and commodities. It is a fiat currency and not backed by anything outside of promise to pay later on.
Do you think it is possible to go back to a gold standard and come off the central bank fiat system?
I do. I think a lot of your listeners and you understand that the Federal Reserve is not the U.S. government's bank by any means. Like the Canadian Central Bank is the Canadian Central Bank. Who owns the Federal Reserve and what's their agenda? It's debatable. But as far as going back to a gold standard, whenever that's been talked about by a U.S. president, usually that U.S. president doesn't see the end of his term. So I won't get into conspiracy theories, but it's just a rather strange coincidence.
Yes. In the beginning, we mentioned about Russia, China taking on gold. Do you think the United States actually has gold? Because there hasn't been an audit in Fort Knox for quite a while. Nobody has even seen the gold in Fort Knox.
I am. The last thing I'm going to do is criticize, the premier government in the world and what they say. So, if they do have the gold, there's still not enough gold to really fund the deficits that have been out there, let alone the debt that's out there. So, I imagine they have the gold because they say they've got the gold. So I'll leave it at that.
Okay. What are the next action steps for your company?
Well, we have a great project up in the north. We have as you know, we've got a significant shareholder in Newmont who's got a property just north of us by about 40 miles. We got great infrastructure. We've been drilling since 2016 when we took over the company and brought Goldcorp in, which is now Newmont, as a major investor. We've engaged in 3 aggressive years of exploration. We've only started to come out with the results from this year's program now. We've got more to come that'll go into the new year. And then we plan on stepping up a much larger program next year. And we really do have, I think, one of the better risk-reward opportunities in the gold equity market. We've got property. We have no debt on it. We have the rights to be there at least till the year 2045 with no taxes. We've spent enough money on the property to earn that assessment. We've got incredible infrastructure through it. And we think this year's program that we'll be working on will bring up even more exciting deposits.
Great. John, thank you very much for being on the X22 Report Spotlight. Once again, how can people find your company and get in touch?
Well, the best way is to go up to the property up in the Yukon, but it's for most people, you'd go to the website, www.triumphgoldcorp.com. And if people want to reach out to me directly by email, janderson@triumphgoldcorp.com, or on my mobile, just text me, 604-218-7400. Probably the best way.
Fantastic. Once again, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Thank you.
And I look forward to be on again sometime. Thank you.
Everybody get your fucking hands up.